What's going on here? You multimillionaires? Well, you should be anyway. Um, Remember what I was saying at Friday's update, that had uh, in the afternoon had a lift in volatility. It's pretty clear, the price was much lower. That's what we always look for, price much lower, but the technicals were much higher. So it's easy to distinguish when you see that, that you don't have to try to, let's see, I don't know if I can figure it out, it just jumps out at you. That's when you know you have something. So that led to a market meltdown, ECS of today, but that doesn't mean. Hey, what doesn't it mean? I've repeated this often enough. Doesn't mean that the options prices followed suit. So that's what we do. That we trade options here. In case you forgot. So we're only interested in the options that are under 10 cents. We're only interested in the options that can produce something of value. And if the volatility gaps up and the market gaps down, well, okay. But what did the options do? That's the only thing that concerns us. The market really got slammed today. Oh man, you think, oh well, I forgot, I missed that. Well, is that the case? Is that really true? That's not the case, as quite often you have seen from the things I pointed out that is simply not the case. So 424. So they were 11 cents the other day. They were this morning at about the same 9 cents, 10 cents, whatever it is. About the same price this morning. So it did not gap up like you'd think. And it took a while for it to start moving up. So that's the 424s. And since you have so much time till the end of the day, you can go the 23s. Well, how's 7 cents for you? That's below 10 cents, isn't it? And it did not gap up and get away from you. So you had the whole weekend, the whole holiday weekend to extract, not add, extract time value premium. So all the times it's advantageous just to wait. So anyway, those 423s, and it never got to 423, right? 423s went from 3 or 4 cents up to about 80 cents. And that took less than an hour to do. So were you there? Not there. So that's all that you have to answer. So I was paying attention to the markets, just like we have here. The volatility, the Qs, yes, SPY, but the Qs, made the nice move. See, you can see the gap down the price of the SPY. You did not see the gap down in the price of the QQQ, even though it was weak. Yeah, sure, it was weak. So nice pattern, weakness. So if you didn't get in to the thing on Friday, would have been no advantage to have gotten in on Friday, except for it would not be a day trade. See, to gotten in on Friday and sold them today. So it wouldn't be a day trade. So you would not be a pattern day trader if that were the case. It would never flag you as such. So that's one advantage, I guess. The IWM, the gap down, it probably got away from us, so it didn't really do much during the course of the day. That it gapped down, then it stalled, then went sideways, and so wasn't too much of a pattern there, and it didn't have a clear pattern on the 15-minute chart. The technicals were weak, but the price was not near the double top. So Qs were right near the double top, and the SPY was over the double top. So that's it in a nutshell. 3 indexes, and they all performed differently. So that's why we look at all 3 indexes. Don't just stop at one. Unless you want to deal with simplicity's sake, you can deal with just one index, follow volatility, and just trade the SPY or the Qs or whatever. All you have to do is just make sure that the volatility is moving the reverse, and then volatility stalled at 10:30 this morning, about the same time as the market stalled. So for the first time, but that's all right. All we care about is the surge. And then after that, you have the drifting down and then back up. Okay, well, what's that mean? Doesn't really mean anything to me, because I'm interested in taking the surge out of it, and that's it. Happens quite often.
Hey, Dale, can I ask a question?
No.
Okay, I won't.
Yeah. Okay.
This is Dennis. I took that trade, but I took it on the SPY because I thought the SPY had the better downside pattern, particularly on the 30-minute. But I see that the Qs performed better. So I know the SPY gapped. The Qs didn't gap. But I guess I'm looking for, is there anything there that I mean, it was a good trade. I'm not complaining about it. But I just chose the SPY over the Qs because of the downward pattern.
Well, that's true. It's got a really a clear pattern from Friday.
Yeah.
Not so much today, So like I'm saying, the Qs and everything else didn't have a pattern today. What the thing that I'm looking for is the options prices.
Right.
You see what I'm saying?
Yep.
So it's not so much that the pattern is in place. Okay, so it's in place. So big deal. I want to know, do I get a fair value for the options? So when I'm looking at the SPY, like today, take it down to a 10-minute chart. So, it gapped down. So it moved more so to the downside. So did you take the trade today?
Yeah, I took the trade today off the 494 puts.
Yeah, okay. That's then you got them for under 10 cents.
Yep.
Okay, so that's good.
Okay.
So put 494. Okay. So this was Friday, late Friday, 2:30 in the afternoon. And then today, you were able to get those for what, 6 or 8 cents?
Yeah, I got them for 9.
Okay, well, 9 cents. That's still under 10 cents.
Yep. Yeah,
So
that's
and then when did you sell them?
right there.
Right
when
there?
when the momentum stopped on the 5.
Okay, that's fine. You can't worry about the price all ultimately ending up higher over here at 61 cents or whatever it is. Okay. So what? Did you take the surge out of it? Yes.
Yep.
And then you would have had to wait. Oh man, I'm probably losing my money. Oh man, it's back down to 10 cents. Ah man, that's a goner, and that's the way people think, But this is not a process that you have to think through, right? See, what I've explained for all these years, no thinking, that's correct, isn't it?
Yeah.
You don't have to think through the thing. You just simply buy the things if they're fair value, which they were. So 9 cents to 40 cents. Okay, so you made 4 times or 5 times the money, whatever it is.
Yeah.
Okay, well that's a good trade.
Yeah, it's a good trade. As I say, when we're choosing between which index to use, I just chose that one based on the Friday pattern looking better than it did. But it made money, so it's fine.
Yeah, consider this. You don't have to choose between them. You can buy them both.
Yeah, you could. Yeah.
Who says you have to choose?
Yeah. Yeah.
Because they both have a good pattern, and they didn't gap up and get away from you. That's right. So you put a limit order in to get it from the prices like this, say 8, 9 cents or whatever, 6 cents, whatever it was for the low. You can put a limit price in. You don't have to say, well, I'm just going to take a market order price and 9 cents. Oh, well, if I got them for 12 cents, that's good. No. That's not good because it's under 10 cents.
Right.
See? So as many times as I've shown this kind of stuff, people still don't believe me. Oh, I don't know about that. Trading under 10 cents. Oh, that's pretty risky business. Is it pretty risky business?
Yeah.
What do you think?
No, I thought that was a very nice pattern that formed Friday, and you were able to get, as you've instructed, to be able to pick up the options. They didn't gap.
Yeah,
And
that's
so
right.
all of that time value, all that time value extracted over that 3-day weekend.
Correct.
That was what I was paying attention to.
That's what we do. And that's all we pay attention to. So it was the SPY and then the Qs. It's the same thing.
Yeah. Qs looked like the Qs that you had up there that put on the 423 looked like it continued longer than that than it did on the up move. The return was continuous.
Well, the pattern was the pattern initially ended at 10:20, same time.
Right. Yeah.
Same time as the other one did. But it came up, this is the problem, that it comes up. Then where's your pattern then? And then for it to drop, where's the pattern? I see an upside pattern, don't you?
Yep. I looked at that upside pattern, just couldn't get much out of it.
Well, you consider that this is sitting 423 something or other, and it moved up to 427. That's $4.
Yeah.
In short order. So does it offer you a fairly decent trade? Well, let me see. that happened at what time? 12, whatever it was, 12, 30. And hey, oh, the volatility started dropping at the same time. Do you see the 5-minute chart volatility?
Yeah.
How it dropped. So that confirms this, doesn't it?
Yeah.
Well, it must, because that's what it did. See, so you don't have to feel like you're at a disadvantage here, because either you trade the one thing and just be done with it and just clear your mind and clear the slate of everything else and stuff like that, or you can practice this like in a simulation account like this one here, and you could just see what transpires. Let's see here, call and 427. Say, you don't have to guess at the price. You just buy the options under 10 cents. Isn't that what we do?
Yes.
Yep. There's no, oh, I don't know if it's going to get to that price. You don't have to think about that. See, no thinking. You don't have to worry about that. Like early in the day, like when you bought the things, you don't have to worry about whether we'll get to 423 or whatever it is. It doesn't matter. The fact is, it's moving in that direction. It's moving quickly in that direction, and the options prices move accordingly, don't they?
Yeah.
Yes, they do. So it doesn't matter. All the things that people think will happen, there they go thinking again. Think. You think your whole life away. While these things just make hundreds or thousands or tens of thousands of percent in a matter of hours, and you're still thinking. I think I would stop thinking and start doing. Right. So like at 12:20, 12:30, these options were it looks like about well, I don't know, could have been 4 or 5 cents or something like that. And then they moved up here to 47 cents. So did that make a profit?
Yeah. Good trade.
Yeah.
Yeah.
You see, but let me see, it had the pattern, didn't it? That
Yeah,
you could,
I did. I was more focused on that SPY at that time. I guess I had to keep on moving the charts around.
that's the way the markets do,
Yeah.
but you don't have to take advantage of it. Don't get me wrong. You don't have to take advantage of it.
Yeah.
I'm just saying that the pattern was there. You see, this pattern, the price alone was collapsed to a much lower level than it was here. And this technical level was significantly advanced, and the volatility confirmed the advance.
Yeah, real clear. Just as the up move, just as clear as the down move.
Yes, it is.
Yeah, I just was wondering if there was something on that Q that I missed, but I guess we just don't know which one's going to perform better. But as you say, you can trade them both.
Well, from the practical argument's sake, when we're looking at the markets during the day, and you say, for instance, you missed out on the down move because the move from the pattern began at 2:30 in the afternoon on Friday, right? Okay, well, 2:15, 2:30, so this was just a continuation. You see what I'm saying?
Yes.
But it's a big but. The options prices did not gap down like the price would start moving strongly to the downside. If you would think the options prices, the put options prices, would gap up, wouldn't you? But that is not the case. And so often it is not the case. I venture to say that probably 7 out of 10 times the options do not gap up like the price of the index does, or, the gap down, whatever it is, it doesn't follow the index because of the time value erosion of premiums. But you would not know that. There's no manual that's going to tell you that. I'm telling you that.
Right.
You look it up in the options archives of things to do and make the best money. You're not going to find that scenario anywhere, are you?
Yeah, no, and it's a good one.
That's right. It's a very good one.
Yeah.
I'm surprised that people haven't caught on, but they're not options traders, and like I am, and they don't trade options under 10 cents. Two marks against them in a big, big, big way. Because you say you made 300 or 400% or 500%, whatever today. Do you realize? I mean, the magnitude of what happened, there, and you're just talking about one trade, and then the other trade would have been, another 600 or 800%. Excuse me. What? You see what I'm saying? Like 5 times, say 10 or whatever, let's say, or 4 times 6. 4 times 7, 4 times 8, whatever it is, that's times your money. 4 times 8 is 48. I mean, 32 times your money. Instead of just one trade that made 3 or 4 times your money, you make 30 times your money. Now they're into the big leagues. Just like that. And how much do you have at risk? That's the key thing that I try to point out to people is how much do you have at risk? Once
whatever you traded at the start.
That's right. When you traded the first one and you made 4 or 5 times your money or whatever it is. So if you put 2 times your money back, then you've always got a profit from now on, don't you?
Yep.
So if the very next trade you took this trade, well, is it that the pattern is not clear? I'm not sure. Oh, geez. Oh, we're looking for a V-shaped configuration, the price at a new low or at the same bottom, and the technical pattern that's sharply advanced. Huh. Well, that kind of looks like what I talk about, isn't it? Yeah.
Exactly.
Yeah, it kind of does. And could you see it coming? Yeah, you could see it coming. You could see it right there. You could see it developing from this point right here when it hit the bottom. And you say, whoa. This is a good trade that's coming my way. Not that's here, that's coming my way. You see? And you wait for the technical pattern to turn in the direction of the divergence and the volatility to turn down to support it. And you've got a good trade right there. For today's trade, that was the only one, was the call side. You see?
Right. It's the only one that formed during the day.
Yeah. That's correct. So only one that formed. It's true that, like I've said many, many times for as long as I've been doing this, kind of, that you have to watch the options prices because that's what we trade. We're trading. We're not trading the index. We're not trading the QQQs. So it gaps down. Oh, okay. Well, so what? What do the options prices do relative to that look that we see? Well, they did not move. Well, how come? I don't know how come. I don't care. I'm not going to clutter my brain up with stuff that doesn't make any difference. You see?
Got it.
So,
thanks, Dave.
Yeah, no thinking.
Yep. Thank you.
All right. Anybody else do as well as he did? And see? could have multiplied those efforts many, many times. Could have been from 3 or 4 times your money to 40 times your money, or 30 times your money in short order in the same day. So what is it that tomorrow brings? See, volatility moving up. Okay, volatility. Okay, well, that's null and void. Okay, now it's moving down, right? Okay, now it's moving. Well, I don't know. At the end of the day, so what do you have to try to figure it out? See, at a clearly defined pattern here, what the price was higher and the technicals were lower, right? And same with the Qs. The price was lower and the technicals were higher. That's what we look for. So it's like it's like a slingshot. You compress the rock back in the slingshot, you pull it back in a slingshot. Well, how far back do you pull it? That's how far it's going to go. So it's just basic physics 101 here. There's nothing complicated or confusing about what happens here. It's just that you have to have the right pattern. So, when we do those classes, those week-long classes, we wait and wait and wait and wait for a pattern that is just like these, and sometimes you see it, sometimes you don't. But what difference does it make? If, like, for instance, he just made 4 or 5 times his money, and even though that's, in my book, that's a really marginal return, it is not a marginal return. You're talking 300 or 400% in an hour. That is not marginal. I guarantee you that is not marginal. That is so prolific as to shatter, any preconceived notions of what is possible in the market, and it'll do it in a big, big way. So imagine you take that 3 or 4 times your money, and next time you make 10 times, and then 20 and 30. It's very, very commonplace in what we do, as you have noticed from what I point out to you guys, on a weekly basis. Sometimes we see weeks that we see multi-100% or multi-100%, or not percent, but multi-100 times your money on these same indexes. That's 10,000% plus. So if you had the same investment you had today, say $1,000, you turn it into 4,000 or 5,000 or whatever it is, on something that makes 10,000, you're talking about that would be $100,000, just like that, in the same period of time with a clear pattern. So it doesn't take too many of those for you to straighten your financial situation out in a big way. If everybody just start believing me, I think, what do I have to tell these guys to get them to believe me? It's not just what I say. It's what do you see what the facts are? Just like you saw today. Well, yeah, I saw the options didn't gap down. Is that what I say? Is that what I've said? For many, many times that you listened to me in the past. Yeah, I would think so. And the buy options under 10 cents. Yeah. So that works. So what part of it doesn't work? That's what I'm wondering. And so all of it is contingent on seeing the pattern. So if you saw the pattern and it only made, like I said, 300 or 400%, what? Who else makes 300 or 400% in an hour? That would be like, let me see, SMCI. See, like this stock moved from 311 up to over 1,000. So that would be the same 3 times your money, right? But you see what happens. It went from 1,077 down to under 700 today. So you're no safer. In fact, it's very risky business when you think about these kind of things. Very risky. Yeah, you can't buy it and hold on to it. Yeah, so you hold on to it, and what you bought it for somewhere up here. So I don't want to miss out, and I paid $700 a share for it, and we'll say, where's your profit? So if you bought 100 shares of it for $1,000, you got $100,000 invested. Now you're down to $700 a share. Let's see, you lost $300 a share on 100 shares. That sounds like 300 times 100. That sounds like a $30,000 loss to me. Whereas, you see, I've explained over and over again till I get tired of explaining it. So I don't really trust the stock market. You see, just like this stock, you guys really trust it? See, I don't know. I don't really trust the market. Like NVIDIA, it's been doing really well. Oh, well, okay. That moved from 475 up to 700 and something. Didn't even double. And you're talking about, you see what I'm saying? You're talking about you made 300 or 400% in less than an hour's time. Did NVIDIA do that? No. Let's see, what's the problem? See, NVIDIA, you had to buy it way back in March of last year, a year ago at 200, and it moved up to 700. Okay, well, it's like let's see, that's 3 or 4 times your money, about like you made on a little marginal options trade. See, so if you invested the same money that you were going to invest in NVIDIA in the options on the whole index, like the Qs and the SPY, that you'd have been far and away greater than NVIDIA has ever produced for you. There's just no way that it's just not going to happen. So, the SOXL, see, it was at $14 or something, and it moved to 41. So that's done better than NVIDIA, and it's the leveraged index. See, so you don't have to worry about any individual components, not ever. Advanced micro devices, how'd that do? Oh, down 5% today. Okay, well, that's real great. Say if you bought it for $180 a share, now it's 160 something. Well, that's $20 a share. So if you bought it and you paid it at 180 and you bought 1,000 shares, you got 180,000. Now you got 160,000. How's that a profit? And it's one of the better performing stocks. Well, okay, but you see the daily chart. See, divergence. See, the price was near a double top. Technicals not following suit. But like I say, I can't trust the stock market, because trusting the stock market without having to watch it is a fool's game. And that doesn't work. And there's Warren Buffett's stock. And Apple doing really well. So it was about $200 a share. Now it's 180. So no matter what, you're losing money. So Microsoft, $420 a share. Now it's 402. Well, where's the profit? I'm waiting for my profit to come in. See? So even on these cryptos, you can't trust them. The only thing you can trust is what? The chart. See, like this price was right near a double top at $30 a share and a downside divergence on the daily chart. So it's come down from $30 a share down to today, it was down to 22 something. But it's not a clear pattern, not a clear divergence like we had on the Qs and the volatility today and just on the short-term chart. So it doesn't really matter. So when we are near expiration and we see a clearly defined pattern either up or down, then you can make money in these things. But you don't have to trust the market. You have to trust the patterns. And that's all. Hey, whereby get away from the news and get away from the events that happen, except for, the Federal Reserve when they do so, that it oftentimes everybody knows about it. But then again, just because they know about it doesn't mean that they know anything. So we look at the patterns just like we did on the last Federal Reserve meeting. And I told you guys between 1 and 3 o'clock that something would happen, and take a look at the short-term chart. Did I not? That's what I told you before it happened, right? Like it was a day like today, Tuesday. And I said, don't forget, the Federal Reserve has a meeting tomorrow. And if you'll pay attention to the short-term chart between 1 and 3, that you'll see a pattern that is like we want. It doesn't matter if it only lasts a day, because the options expire at the end of the day. See, you're not buying something that you have to hold for tomorrow or something like that. Just do like the thing that he did this morning. So you see the surge in volatility, and you see the breakdown in the Qs and whatever it is, or the SPY, and you buy it and hold it for that period of time, and then that's it. You're done with it. So it's an amazing amount of money to be had. And is it real money? Those of you who think it's not real money, well, I got a clue for you. It is. And if you invested $1,000, it would quickly turn into 4,000 or 5,000, and then that 4,000 or 5,000 could have turned into 8 or 9 times that amount, and you'd be in some real money today, not some other day, some obscure day in history, or some day it's going to happen. No, today. That's what you get when you pay attention. People who don't pay attention don't make any profit. So what am I supposed to do? Stand over you and say, now, buy. Well, I don't know. I hear all excuses now. Well, I don't know about this, and by the time I'm trying to convince one person to get off the dime and push the button and buy, then somebody else has already bought, or somebody else, you see what problem I have. So, I'm telling you, this is the pattern you were looking for, and that's all you need. It's a really simple thing to do if you will just do it. See? So it doesn't matter so much that what he did today was not as good as the Qs. Well, you could buy both of them, like I said. you know, you don't have to guess at which one's the best because they both look good. You know, you buy one, I'll say, well, this one outperformed. Okay, so what? Next time the other one might outperform. Who knows? So you buy them both. You know, you still don't have to look at very many things. You're only looking at volatility and the indexes. See, you're not looking at Mara and MicroStrategy. You know, you're not looking at any of these things. You don't care what any of these things. These options don't expire on these things until Friday. So if they happen to have a pattern that looks really advanced on Friday or Thursday afternoon or something like that, then you could buy them. Okay. Not adverse to that because they make big moves. So but the times that might happen, you would have probably already seen 6 or 8 good trades on the indexes. That's why I trade the index. And you can stay focused. You don't have to worry about, oh, I missed that one. So what? You know, if you got 10 times 10, so that's not it. You know, you've seen from what I've shown you that 10 times your money is a drop in the bucket. So if you make 10 times your money, then times 10 times your money, oh, well, that's 100 times. And then times 10 again, never, ever, ever making more than 10 times your money. That is a 1,000 times your money. You understand? 1,000 times, not 1,000%, 1,000 times, 100,000%. And it took 3 trades. Let me see. I looked at the options volume today on the SPY. Did you guys happen to notice that? You know, looking at the volume, you know, that every single strike price just about that was at or out of the monies, slightly like that, you know, had 500,000 contracts traded, you know. So I don't know what the volume is on the SPY nowadays. 6 or 8 million, 10 million shares are being controlled with options every single day. So somebody's buying the options. If it's not you, it's somebody else. And I'd rather it not be somebody else. I'd rather it be you. So yeah, it's plenty to watch for, plenty to look at. And it's easy to do if you just think, well, you know, here's the volatility index, it's pretty advanced pattern, yeah, Friday, and then it was continuing into today. Oh, well, that looked pretty good. Looked pretty good there. And then, but let's say, for instance, you missed that. Did you miss the reverse happening too? That was confirmed, mind you. See, this is what I look for. It's like, well, wait a minute. Well, this is a pretty clear pattern here, wouldn't you say? Has a downside divergence. And well, that has an upside divergence. Yeah. That's what I'm looking for, isn't it? See, instead of thinking it through and saying, well, I think I'll worry about it in an hour or two. And by that time it's up 1,000 or 2,000, 10,000%. Who knows? You know, so you can't wait. You have to look at the price when it's at the bottom and the technical picture is advanced and it's declining on the volatility. And just like that, you got a big, nice move. So the cues as where the market has been reacting lately because the NASDAQ stocks, advanced micro devices, and, you know, NVIDIA and Apple and Microsoft and blah, 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 you know, that's where the action is, the Magnificent Seven, they call them, or whatever, you know, but that's where the activity is going on. So if you watch them, you'll see that they make some big moves. So like even this thing here, in the last 30 minutes of trade today was 4 cents to 45 cents or 53 cents. Just like that. That's well over 1,000% just in the last half hour. So you take your 3 or 4 times your money or 5 times your money on the put trade that started out today, and you multiply it times 1,000%. You're talking, let's see, 5 times 10 or 15 or 12 or whatever, 11, 12, 13 times your money. So say 10, say 5 times 10, that's 50 times your money. And there wasn't anything at risk, you know? So you guys got to get over the idea that, well, I don't know about that, you know, you keep saying, I don't know. That's what I hear all the time. Well, I don't know about this, you know, I don't know about, well, what do you know? The point is that you know that the pattern is correct. That's what you know. That's the only thing you need to know. This pattern is the correct pattern, and this pattern validates it in reverse, and that's what we look for. See, and just like that, when everybody else is still studying everything and trying to figure out why things are moving, who cares why they're moving? You know, point is they had a 5-minute chart pattern, and this is more than halfway through the trading day. Well, is a 5-minute chart pattern that's got that kind of extreme divergence a valid pattern? Well, sure. You know, so everybody else is trying their best, their doggonedest, to make 20% a year. You hear me saying a year? Hedge funds and everything, they can't even manage to make 20% in a year. And you made 1,000% in a couple of hours. You realize the major implications of that. I mean, this would be so astronomical in its valuation. It's not even funny. My calculator doesn't even go that high. You know, 1,000 times 1,000% times 1,000% times 1,000%. You could do that endlessly. You know, you see an occasional 2 or 3, 4,000%. We'll take advantage of that because the pattern is clearer. It's easier to understand. The 4,000% moves are easier to understand than the 1,000%. It's not like people try to convince you that, well, I don't know, in order to make 4,000%, you really have to have something prolific or something really, well, that's not really true. It's just a matter of, you know, the time value and the time left until the options expire, and the force of the pattern. That's what determines how much return it's going to be.
Hey Dale, can I go over the timing of how important it is to enter on that trade like for today? Because I entered on SPY today based off the same pattern, 499 calls, and I know I entered a little too late. I've been trying to work on not jumping the gun so much myself, and and I entered probably too late and too far out of the money. And the contract didn't really move for me.
Okay, so if you look at the SPY, it was sitting at 494 and a half. So the options that were under 10 cents, if they were too far out of the money, right? Okay, so we're going to look at 497, let's say. Oh, excuse me, I forgot to put the call. Okay, 497. Well, at that time they were 12 cents. See, so 498, they didn't really produce too much there either, you know. So they kind of went sideways and flatline because the price of the SPY was not moving as greatly as the Qs. Probably a measure of the components that started to move were within the Qs and not within the SPY. So it moved from 494 to 496 something. So it only moved a couple of dollars to the upside. So yeah, 499. Now you wouldn't have needed a 499 in the first place. You know, you had to buy right here if you're going to be buying. So when it's at the price low, that's when you buy. And only if it's a fair value. So if you look at a 497, 498, that doesn't seem like a fair value. Like, see, and compare it, you know, you were not doing too much here. You understand? See, there's not too many factions that you have to deal with. So we're only going to deal with the SPY and the QQQ because the only ones that had a decent pattern at the time. The Russell 2000 was didn't have the pattern. So let's see, well, 24, 24, 0, 2, 1 there. See now 426. That was at 22 cents. Yeah, so you know, too much for those too at the time. See, but 427. See, now these would have been okay because they're 7 cents. And they stayed around 8 cents, and then they moved up to 50 cents. So a little bit different. So you know, you see this on this one, you have to buy options under 10 cents, and that goes without saying. So if the options that you're thinking about buying on the SPY under 10 cents are too far out of the money, and or they're wanting too much for them, you can tell when and they want too much for them. You say, well, you look at 499, like you say, well, and they want 3 cents or whatever for them. Well, that seems a little far-fetched because I don't think it's going to make it to 499 based on the pattern that we see. So, but on the Qs, yeah, think, well, it looks pretty good. Yeah. See, so the fact that the volatility broke down, especially from 130 something, it was showing a strong downside pattern on volatility that lasted until 321. and then that moved back up. So that would have sent the market down from right here, 321 down. You got to trust the short-term chart pattern that sent it down. So from almost 497 down to 495, it dropped $2 abruptly. But see what the volatility said? Yeah. At 421. That's what it said. So if you don't want the patterns that have the ability to waver back and forth like that, then you need to just wait until you see a more clearly defined volatility index and clearly defined SPY or QQQ pattern that a pretty clear pattern here. So right here until right here, that's where we had a good move. But we've seen much clearer patterns than this in the past. So, if that's any gauge, which it is, then you look at 15-minute chart patterns or 30-minute chart patterns that have strongly advancing technicals, like this is showing here, but on a higher time frame. It gives it more credibility. So, like I say, you don't have to be trading everything. And if things don't line up the way you want them to, like, well, I'm trying too hard. I'm trying to make this thing fit, and it just doesn't seem to be fitting. Then cancel it. You're out of that trade. No more. Like when I did in the class thing, I entered a trade and then I couldn't get the options at the price that I wanted to get. I just canceled the order. So it's just another day. It's no big deal. So if you don't see what you want to see today, perhaps you'll see it tomorrow or 2 days from now or a week from now. So that's the patience part of it coming into play. You have to be patient and wait for the pattern to emerge. So it's not clear. It's only a 5-minute chart, by the way. So only a 5-minute chart. So does it have a clear technical pattern? Yeah. And on the Qs, yeah, pretty good. See, on the SPY, yeah, it's pretty good too. But when you look at the options prices, that's when it changes. You say, well, I want to be able to buy a reasonably priced options at a reasonable valuation. So let's say I'm looking at 497 here. Say, I don't know. Let's say, well, maybe they're 9 cents. Whoops, excuse me. 9 cents. And then 45 cents. Well, that's 5 times your money, isn't it? I mean, so from 215, so I don't know, it wherever around is still, that at the same price. I'd like to see the options prices start moving up, in short order instead of having to wait around for them. Because the thing that you really learn with this type of trading, I don't know about other types of trading, but with this type of trading, is you can't afford to wait for the options prices to catch up with you, because the thing, just like we're learning about whether the price gaps down doesn't mean the options prices do. That's correct. And that's also to your disadvantage on prices that move sideways like this and then decide to move up. I don't know about that. See, so that's why I canceled the order is only minutes after I implemented the trade because it didn't get filled at the price I wanted. And if that is true, then I'm not interested in taking it. I'll just skip it and worry about it the next day or 2 days or 3 days later. I've got to feel comfortable with knowing that I entered the trade and the options that I chose for a specific reason. And if that reason is not there, and it like this price, I don't know. See, you want to see the option prices start like say they spike down. Well, you want to see them spike up. So, that's the way it is, but it's not that it didn't make a profit. It did make a profit. I mean, I say profit because, you're talking at 5 times your money and that is a profit. A great profit? No, not even close to a great profit, but it is in a matter of speaking, because when you're comparing 400% return to anything else that happened in the market, let's see, where else did you make 400%? Let's see, nowhere. And you only made 400%, you see, like on the SPY. Yeah, okay. Or 300% or whatever it is. Yeah, oh, okay. But in relative terms, that is a huge return because you take 300% even and compound that. And let's say the same kind of a thing happens every day, for instance. So you take 300% times 300% times 300% and you run that out for 250 days, trading days during the year or whatever it is. I mean, you're talking such an astronomical number that it's not even funny. That's without ever having anything that makes 500%. And you keep remembering that you invested 1,000 and you turn it into 4,000. So you put 2,000 back, and then now you've got 2,000 left. And you do the same thing. And from then on, you just 2,000, 2,000, 2,000, 2,000. And every single time, just invest $2,000. Or, once you've done this 5 or 6 times, if you don't put at least $10,000 in, I don't know what's wrong with you. Because, clearly the patterns tell you what's going to happen, and it does it. Even did it right here. Even though it doesn't seem like much, it still did it. See? All right. Everybody got it? If you don't get it, you're going to get it. All right. All right. Well, we'll talk to everybody later. And just pay attention to the chart. Don't buy unless you see a chart pattern. All right. You see that that's what works. That's what always works. Without a pattern, you got me. I don't know what's going to happen. Could be anything. I don't want anything to happen. I want what I want to take place to happen. All right. Talk to you later. Have a good night.